Welcome back for my final daily report market analysis video for Friday the 24th of April with me, Richard Perry, market analyst at Hantec. Well, let's have a look at this gold bull run. Two bull candles in a row really re-engaged the upside momentum. A little bit of a stalling today, but I don't think that's going to take too much out of this bull run higher. I think we're going to still be seeing a retest of the 1746 key reaction high from earlier in April, which is a 7-odd year high dating back to November 2012. So I think that there is still legs in this run higher. You can see the strength through momentum indicators ticking higher, stochastics, MACD, RSI back above 60, all looking pretty decent. I think holding that 1702 level of the which is a pivot essentially now. It's been pivotal throughout April and it was the old high, so it's pretty key support there to the downside. So any sort of downside drift, I think, needs to be finding support around that 1702 level. You can see here on the hourly chart, 1702, but also a little pivot at 1690. So 1690 to 702, very decent buying area. Interesting today, we've seen a pivot line forming around that breakout 1718, so old resistance becoming new support on the return. Couple of occasions, still holding that for now. Little bit of a drift back on hourly RSI, but anything around 50, maybe even 40, I think it's a buying opportunity really. MACD line is still positively set up as well. I think it's still looking decent to buy into weakness at this stage. 1702, if you breach that, you'd start to think a little bit less positively. I think under 1690 you really would start to put a pin in the bull run, and that becomes, well, essentially neutral. I'm only talking about this from a downside perspective risk, but 1660 is obviously key support now, and if you break below that now, that will complete a double top pattern. But I'm not thinking that at the moment. I think the outlook still remains pretty positive for testing of the 1746. Beyond that, let's put the 10-year chart on. You're looking out for these 2012 highs. You got this one at 1754, and then further out at 1795, and these are the two levels that you'd start to trigger as your next resistance on a breakout above 1646. So with that in mind, I wish you good luck in your trading and a happy weekend. Thank you very much for listening, and I will speak to you next week. Click here to subscribe to our analysis videos and go to our website to sign up for our webinar.